Hello, everyone, and welcome to today's webinar, Scaling Smart Practical Tips for Expanding Your Real Estate Investment Business. I'm Amra from New Silver Lending, and I am thrilled today to be joined by the incredible Laura Sides. She is a successful real estate investor and entrepreneur who scaled her business by flipping properties and building smart systems. Laura, thank you so much for being here with us today. We appreciate it.
Thanks for having me.
All right, awesome. Well, we're going to go ahead and get started here. We're going to dive a little bit into your journey and hear how it all started. With that being said, let's start with your story. Can you just kind of give us a brief overview of your journey, maybe a little bit about how you got started and why you chose real estate investing to start with?
Absolutely. And I think the most important thing here is to say that I had no background in real estate whatsoever before I decided to get in. I was a middle school science teacher, and then I ended up staying home. We had 3 kids, and we were on vacation in Florida 4 years ago. And I had the book Rich Dad, Poor Dad. And I read that and I said, man, there's a whole nother world out here where people are using money to make money instead of trading their time for money. And how do I access this? And I didn't really know the whole plan, but I put one foot in front of the other and I bought my first flip, and the rest is pretty exciting.
Fell in love with it. So with that being said, what's one thing that you kind of wish you knew before you did your first investment? Like if you could go back, what's the one thing that you wish you had learned before you started that first flip?
Yeah, this question is great. And I had to really think about it. And I think that the real thing here is I wish I knew more about options for funding, because at that time, and this is almost embarrassing now to talk about, I reached out to a conventional lender to do my first flip because I truly had no idea. And I think we're going to talk about, but like surrounding yourself by the right people that can help you understand different facets of how to be a real estate investor has been incredibly helpful. So wishing I understood the funding piece better, definitely.
Awesome. Yeah, we'll definitely get into the funding aspect of it. I think it's extremely important. But you have such a cool journey here. So I thank you very much for sharing that. So we're going to kind of shift gears a little bit here and just go into the hustle part of it and how to kind of spot a winning deal here. So sourcing deals is such a critical part of growth, right? What are some of your go-to strategies for kind of consistently finding profitable properties to flip, especially as your business scaled?
I love that question. So we live in the Philly suburbs, so Philadelphia suburbs in Pennsylvania, and it's a high dense area. So I focus on really good school districts, places that the average days on market are lower than a month. And then what I'm looking for are things that can be super cosmetic. I don't like a lot of structural issues or anything like that. And typically I'm finding a lot of our deals on Zillow. I'm working with an investor savvy agent, and they're feeding us deals. And then we're picking up deals that are on the market. They're out there.
All right, awesome. And I think you kind of touched base a little bit on this as well, but when you're analyzing a potential flip, so you've already found the property, can you kind of walk us through your process? Specifically, what do you look to make sure that your deal is actually profitable?
Yep. So I look at other houses that have sold within a half a mile radius from where I'm looking to buy. I want to know what they sold for, how long they sat on the market, because your holding costs are big in real estate. And then I want to look at what their finishes are. So once I can confidently determine what the after repair value of the property is, I can determine, what's my renovation budget? How much is the money going to cost? How long am I going to hold it? And then just quickly act on it.
And I assume the agents that you're kind of working with on that partnership side kind of help you with the comps and all that stuff as well.
Yeah, absolutely. Just putting those professionals in place that can do their job so you can do yours.
Absolutely. Time is valuable, 100%. All right. I love that strategy talk. So let's kind of talk about the money side of things, because obviously, as you know, funding can make or break a flip, right? So when it comes to financing, there's a few ways to fund a project, right? You mentioned conventional, which is not the conventional way of doing this. But how do you decide which funding route you take for each project, whether it's, I don't know if you cash fund any of these or whether you finance on them, and how specifically has hard money loans supported your ability to grow and scale as you've kind of scaled your business?
So what I learned in the beginning was when people are saying that they're buying in cash, it's not necessarily their cash. And the way that you can leverage your funds is really critical to your ability to scale really quickly. And also put safety safety places, right? If I'm using hard money, you guys are also analyzing the deal for me so that you have these parameters in place that are helpful. So I like to use HELOCs. So I have a HELOC on my primary and then on both of our short-term rentals. And I use that as my cash reserves to use as down payments if I need them. Usually once you're established a relationship with a lender, you might not need those or any type of payments for the holding costs. But the biggest piece is that hard money funding for our acquisitions allows us to pick up more properties than if I were just doing it on my own through HELOCs.
Awesome. It's a good strategy. And if you could kind of just give one piece of major advice when it comes to financing, what would it be?
Use other people's money.
It's a good piece of advice. Super helpful. All right. So let's zoom out a little bit and talk about a bigger picture here. I know a lot of people, have probably questions, and this is a big topic at this point in time. Let's talk about the market and everything that's going on right now. I know you've been through a few market cycles here. Where do you kind of see from your perspective at this point? Where do you see the real estate market heading over the next few years? It's a big question.
It's a big question. And I think that there's so much potential in real estate. And if you really focus on what you're doing right now, especially if it's flipping houses, you just need to know that within the next 3 months, this is going to be good. And if you buy right and you can't lose, what the interest rates are doing aren't too critical. You just have to be careful with calculating what your after repair value is. Maybe you take off 5 or 10% as a cushion if the interest rates swing one way or the other, especially if you're comparing it to comps when there were lower interest rates.
Absolutely. So what I gathered from that is kind of doing your homework on them upfront before you actually enter the deal is probably the most critical part of the entire process.
Absolutely. Because there's going to be, and you want to area that has lower days on market. You're not going to hold this property for 6 months or a year, hopefully. But yeah, just buy conservatively enough that you're not too worried about the interest rate.
Awesome. And I think my next question was kind of around the rising interest rates. And are they impacting your exit strategies at all at this point in time? Or are you thinking about that more on the front end?
I always like to analyze and have different exit strategies lined up. Will this work as a long-term rental? Could it work as a short or mid-term rental? What does it look like with a flip? What's the worst case scenario if I did have to hold it? So I do consider that definitely the interest rates, especially if you're for people that are burring and they're going to cash out refinance out of the hard money, you probably do have to consider that interest rate pretty significantly because it's going to impact your bottom line. So all things to consider for sure.
Awesome. Is your long-term strategy to fix and flip? Like, is that the first thought that kind of goes into your head when you look at the property, or do you kind of determine that just based on the type of property that you're doing? Like, do you already know what you're going to do with it before you get there, or do you make that determination as you're kind of going through the process?
My husband just said the other day, he's like, can you please start holding some of these properties instead of flipping them? And honestly, all the more experienced than me, really, the investors that are doing really well are saying, hey, Laura, you should be holding more of these properties. What my strategy is now locally in our area is to flip them because I can make more money quickly with that and then take those profits into a market for us, that's short-term rental markets, so that I can take those profits as a down payment and renovation and furnishing costs in an area that's higher appreciating or equally appreciating to the Philly suburbs and gives me higher month-to-month returns.
Makes sense. So kind of just looking at the short-term rental now that we've kind of started talking about that, was that your initial interest when you talked about or when you thought about holding these properties? Did you think about short-term, or is that something that kind of just you heard about it in a networking group or something came up and you're like, hey, that sounds interesting and you wanted to get into it? Because a lot of people that we actually talk to and a lot of people that I've known have gone towards a conventional long-term rent, right? And then the short-term rent is something that other investors have explored. So I'm just kind of trying to figure out where that kind of idea popped in your head and how that evolved.
I wanted to put our money, the profits from these flips, somewhere where it could make more money. And the idea, especially in our area, if we're doing long-term rents here, the idea of making $200 to $500 a month on a property profit wasn't appealing to me. I'm like, where can I take this money and make at least $1,000 return a month consistently? and short-term rentals entered the chat. And that they've been really good to us, and the properties have been good. It's fun for our family, right? Because then we can also go on vacation there. So there's other perks beyond just those monthly returns, which are better than I would get as a long-term rental.
A vacation home that gets you money and gets your revenue on a monthly basis is always a good thing. On the flip side of things, there are deals obviously in every market here, right? So looking at the market overall, what are some opportunities that you're kind of most excited about currently?
Okay. So I think a lot of flippers don't consider these from other people that I've talked to, but something that works insanely well for us is condos and townhouses. And I know they're not in every market, but maybe we're a more densely populated area. And any single family home in this area, you're not really getting for under $400,000 or $500,000. So townhouses and condos are great options for people, but a lot of times they were built in the 70s, they've been lived in for 30 years and they're dated. I know the bones of that property are good. I can go in and in 18 days cosmetically pull everything out and put it all back and make, in 18 days, we're typically seeing like $65,000 return profits on those properties.
Awesome. Awesome. I do know that some of the investors that we work with, and obviously internally, some of our concerns are always going to be about the HOA fees. How do you kind of approach that? Obviously, that has to be built into everything as well. So looking at that, like if there's larger HOA fees, how do you kind of determine price points or I don't know, even the amount of rehab that you do in the property? How does that affect how you approach that?
I love hearing that feedback from the lender side. It's so interesting to hear. So I definitely look at the HOA fees comparatively to other condo or townhouse complexes in the areas, what their amenities are. So what you can list when you're selling it as this is what they offer for this amount. And then still, I can usually pull really strong model match identical comps in that same exact community, whether it be townhouses or condos. And I can say, this is very, I can be very confident that this is the price that it will get when I'm all done, because the exact same condo that was lived in, and mine's going to be essentially brand new, got this price last month. So it's great for comping.
Awesome. Awesome. All right. Great insight here. So I kind of want to shift a little bit and let's just talk about people, relationship networks and connections that kind of just keep that momentum going. Right. So I think we talked a little bit about this off camera as well initially, but networking and partnerships are such a huge part of this business. So how has networking contributed to your success and where you are today?
Oh, it's everything. Real estate is relationships, right? I started this with absolutely no background in it whatsoever. And I thought to myself, if I can just put people in place that know more than I know, lean into their understandings and expertise in their areas and learn from them, and then we all grow together, I feel confident I can be successful. And just doing that and letting people do their jobs and being easy and friendly and kind to work with goes a long way. And then just meeting, besides meeting all the key players as agents and lenders and this and that, relationships are so critical. Your communication, especially with lenders, building that relationship with them, being a trusted borrower, and just knowing that no one's working for me. We're all working together.
Absolutely. One thing that I learned at a networking event as well was you never want to be the smartest person in the room, right? So to me, that stuck out a lot. So everywhere that I go, I want to make sure that I learn something new. So I certainly understand and agree with what you're saying here. So as far as partnerships and connections that you've kind of built along the way, I know you touched a little bit about that. How have they helped in that? And how do you keep building those strong relationships as you continue to scale? Like, what do you look for next,
Yes. I love to continue to show up. So you're never, like you said, you never want to be the smartest person in the room. So continuing to seek out those connections that are doing more than you, but also that you can add value to the conversation, making time for those coffee appointments or real estate investor meetups. I've never been to, because we have 3 young kids, but I've never been to like one of the investor getaways yet, or, retreats. And I'm super excited to do that one day. But I just think showing up, and then also I started an Instagram solely. It's not personal. It's just to share my journey and, encourage other people, cheer them on, help to let people know what I'm doing. And I think that's been really beneficial, just putting myself out there and showing my work like that for connections.
Absolutely. And that's not easy to do either, right? Because you're sharing your entire life story. So,
Yes.
um, with that being said, what's one of like the underrated habits or practices that has helped you stay consistent as you've scaled through this?
That's such a good question. I think just keeping your eye on your goals, right? But also the relationships and other people cheering me on is huge, right? Like, yes, I am doing a good job, because sometimes I think we're our own worst critics. And you're like, am I doing enough in my personal life and with my husband, with my kids, with investing, with Instagram? It's a lot. But then when you step back and realize, like, this is fun, I do enjoy this, it absolutely gives me life. If there's a couple weeks where I'm not actively working on a flip or networking, I'm like, this is boring. I do need this in my life. I really, truly enjoy it. And that just getting in that environment with other investors is super motivating.
Absolutely. Absolutely. At one point, did you know, or did you start to build a team of your own? Like, what was your first hire?
I don't think I realized that I was doing it early on that first flip, but from very early on, I was testing out contractors and subs. And I was clearly communicating what I needed from them. And then if they just weren't meeting those needs, then, they just wouldn't get called back on the next project. And now, fast forward, 3.5, 4 years later, we have such an incredible team of well curated contractors who we communicate incredibly well together. I like working with them. They like working with me. I've referred many people to them. So I'd say the contracting team is really important. And then also early on, and I didn't realize it was happening, and I never understood relationship with lenders or banks, but talking to them, telling them what you're doing, and just creating that relationship. I'll send out just a 1-paragraph email to be like, this is where we're at. This is what I bought. This is how the project's going. They don't expect that, but it's nice to have that open communication so that everyone's all on the same page.
Absolutely. Communication and transparency is definitely key to everything. And one thing too, contractors are such a huge part of this, right? You can't really get anything done without them. And most of the time that we've seen, some investors having issues with flips and things like that, it can be traced back to the contractors as well. So I just kind of want to, emphasize that the contractors and having that solid relationship with good contractors that are dependable and do good work is so important in this business as well. And then obviously financing, right? You want to make sure that you have a reliable financing partner that's going to be able to get you the money that you need. And the trust goes both ways, right? So they trust you as the investor that you've done your due diligence, and you trust the lender to be able to come through with the funds to make the flip go. So it's really a two-way relationship there, and it has to work for both parties. So it's awesome to hear that from your end as well.
I think what you're saying there is such a good point, that it is both. Like, a lot of times I think where people go wrong with contractors and lenders, they just say, this is what I need, this is what I want you to do, and then think that you're just going to do it, when really it continues to be a two-way street. And from a lender perspective, right? Like, if you're going to ask me for paperwork or proof of funds or finances or whatever you need to do that. You do what you say you're going to do and do it in a timely manner. Same thing with the contractor. I don't just hand them a scope of work and say, all right, guys, I'll see you in, 18 days. Yeah. I'm checking in with them constantly. Do you need anything from me? How are you doing? Are there any obstacles? How can we solve them together? It's never like, this is your fault. It's like, hey, here's an obstacle. Let's figure it out.
Absolutely. It's all about building those relationships, right? In the long term and the short term. That's what it comes down to. And then my final question kind of in this section is, again, I think we touched base a little bit about this off camera as well, but what would you say to women who kind of want to break into real estate investing, but may feel a little bit intimidated with everything going on?
Oh, that they absolutely belong. It is natural to feel intimidated, but real estate investing doesn't have to be men in suits and boardrooms, or, it can be these relationships that you curate, and especially getting around other women or in the room where you absolutely belong at the table, and just having the conversation. And then, just like we're doing now, talking to other people that have experience, or surrounding yourselves with good lenders or people that know, that can encourage you and kind of guide you. And then just those repetitions are really what matter. Just keep doing it, keep showing up, and your confidence doesn't come first. It's going to come next. And you just have to do it and fake it till like, act like you belong because you do.
It's okay to take up space, right?
Absolutely.
Awesome. I love that. All right, Laura, it's been such a great conversation here. So thank you very much for sharing your experience, your wins, and some of the tough lessons as well. It's been amazing to hear how you've scaled your business with intention, with clarity, and with grit. And I know a lot of people watching are taking notes as well. So we're going to take a few seconds here. We're going to open it up and take a few questions from the audience. So if anybody has any questions, feel free to put them in that comment section.
Oh, thank you. I see that. It says, what's my Instagram? If you want to connect on Instagram, I'm Sides Investing. And I love that. So we have 2 projects going on right now that I'm sharing. And I actually just, for the first time ever in my 4 years, partnered with someone like a JV on a flip. So it's interesting to see that. It's been a disgusting house and they kind of brought the deal off market. I'm like, yeah, I'll partner with you. So that's fun. And then we're wrapping up another flip. Oh, I see that. So I see, are there certain types of markets or neighborhoods where you found it's easier or harder to scale smartly? I love, and I didn't learn the grading system at first, but like A and B class neighborhoods where there is desire to be there and the community wants to have your help, up because you're basically, in my case, I'm flipping these houses and giving them back to the community, raising everyone's property values. And I found like the neighbors in the street will come cheer you on. So good communities. I love townhouses and condos just because they're quick and easy and a great return. And there's usually a lot of people that want them. And I stick in good school districts. I see down payment amount I typically put down. Well, it depends, I think, right, Amra? So when you develop, it can, well, actually, why don't you take that one? Because I feel like you probably can speak to that better.
Well, yeah, like you said, it depends, right? So you want to develop a relationship with the lender, and the more experience that you have, obviously the better leverages you're going to get, right? So you can go from 20% down to 10% or 5%, or even some lenders offer 100% financing. Others do not, but I would say typically you wanna have cash reserves, right? You want to show that you have the money there. You don't want to necessarily have to use it for the closing costs, but you want to show the lender that you do have the money there, because that makes the lender more, makes them feel better to know that you have those cash reserves there. So you certainly want to show that liquidity. I would say on average, you're probably looking at about 10 to 15% down as a starting point there. And obviously, as you build those relationships, you can certainly cut that down payment amount down.
Yeah. And I agree. So that's been my experience too. Same thing then, because you don't just have to worry about down payment and cost. You want to think about holding costs, which a lot of times if you're doing hard money is a percent. And then also sometimes there's fees on the front end or points. So consider all of that and make sure you're asking the lender those questions. And then tell them what you want, Lisa. So if you just want to do 10% down, say, how can we make this work? So it's a two-way street. So just have that conversation.
Absolutely. Sure. And kind of just to bounce off that as well, right? So we, part of our entire business strategy here is we provide these preliminary term sheets up front. So you don't necessarily have to talk to a loan advisor to get a term sheet. We know that a lot of our investors are looking for quick turnaround time. So you can go online, fill out an application, get an instant term sheet, right? We always want there to be a conversation after those term sheets, because if any of those numbers don't work for you, have that conversation and say, hey, you know what, these are starting terms. Let's talk about this and let's see how I can make this deal work. So it's definitely very important to not just look at a piece of paper and say, okay, well, I can't do this. It is what it is, and walk away. I think having that conversation, letting the lender know this is what the deal looks like, this is what I need, how can we make this work, is very important to your point there.
And I love that you have that on your website. And I remember you guys have a lot of resources.
Absolutely.
to help you analyze deals and that kind of stuff on your website was really valuable.
Yeah, absolutely. We have a lot of calculators, a lot of useful information on there that you can use to just educate yourself in general.
Yeah.
It looks like Jackie has a quick question as well. Do your contractors get paid along the way, or do you pay them at the end when it sells?
Good question. So I typically pay them along the way. And so there's two ways you can do that. You can pay them out of your HELOC or like your cash. And when I say HELOC, I mean home equity line of credit. Google that. It's very valuable to have. Or a lot of times, and Amra, can you speak to this? Do you guys build in those renovation costs into the loans? Is that correct?
Absolutely, yeah. So for our loans, you get your rehab budget, and then obviously you have your purchase amount, so that makes the total of your entire loan. And for us, it's a draw process, and I'm sure that you're familiar with that as well. So your contractors do the work, you upfront those costs. The contractors do the work. We reimburse you once that work's completed, and that's confirmed based on an inspection. We do try to keep our draws pretty quick as possible, but obviously those timelines depend on how quickly the inspector can go out there, take pictures, and send it back. But the turnaround time from the time the investor requests an inspection to the time that it's paid out is typically about 3 to 5 business days max on that front. So you do get reimbursed pretty quickly there. Obviously, you want to make sure you pay your contractors as you go along, unless you have a really good relationship with some contractors. On that front, you obviously don't want any mechanic liens or anything like that gets gets ugly on the back end. But typically everything's paid up front as you kind of go along on that front.
If you have a really good GC that you like working with, Jackie, or anyone, right? Sometimes I've seen where you can partner-ish with them, where you kind of give them this buy-in where you'll give them a low percentage of the profits on top, but it's kind of like a good incentive for them to do a good job, because the higher the sale price, the more they'll get paid. And not only that, then they'll want to get that, pick up the pace, because I think a lot of times they drag their feet. So like, come on, let's
Absolutely. Incentivize them any way that you can. It looks like Carmel had one last question. What's one piece of advice you'd give to busy professionals trying to build a real estate business on the side?
I think that going to those investor meetups and maybe partnering, just like I'm doing now. So the JV I'm doing, the guy has a full-time job, but he brought the property. So we just have a really good JV agreement of a profit split type of thing. And you can get into investing and still, do your 9 to 5 for sure. Or, I mean, I run Airbnbs and I could do that if I was working full time. So you could also just, put 10% down on a vacation home, turn it into an Airbnb, and then do that from home.
All right. I'm going to have to find a way to buy me a beach house.
100%. Yeah, you should do that. Not only that, you guys, and we're not talking about this, but the tax benefits of that are incredible. Connect with me on Instagram. I'm happy to share it with you.
Absolutely. All right. We'll take one final question here. How do you usually find your contractors? Are you using any platforms, word of mouth, etc.?
In the beginning, the contractors, and a lot of them that I have now, were referred to me by those agents. So if you connect with, and I think this is critically important, you can't just work with any real estate agent. It should be someone that is specific to investing. So the agent I work with is also a flipper. And I went through a couple agents before I got to him, and it made all the difference. And Bigger Pockets actually has an investor agent finder on there. And that was really helpful. So I suggest that. And then, so they recommended contractors, and then just, different meetups and stuff, word of mouth for sure. My neighbors, stuff like that, real estate agents.
Awesome. All right. Well, Laura, thank you so much for your time, your insight, and your honesty throughout all this. For everyone joining us today, thank you. If you have any more questions or want to learn how New Silver can help you fund your next flip or help you scale, feel free to reach out to us. Until we meet again, here's to big visions, solid plans, and hopefully no surprise plumbing issues. Good luck on your next project. We'll see you guys next time. Thank you so much.
Thank you.
Bye-bye.